So the interesting thing is the factor rates can vary from 1.3 to 1.45, or it varies, right? So
yes,
that's really, if you look at it from an investor standpoint, that now there's fees, there's syndication fees, there's management fees and different things. But so like if you're lending $100,000 and the factor rate's 1.45, you're getting paid back $145,000 over that term.
Last year, as an industry, funded over $23 billion to small businesses throughout the country. So it's really between 10 and 12.5% is where we see the default rates kind of varying over time, right? So that means if the average return is, let's say, 45% over 6 to 9 months, but our default rate is about, let's average out 11.5%, that as an investor, right, so you have access to a portfolio of deals, right? So the key to this is
Hello everyone, we have a great episode today. We're going to talk about something that I got really interested in it was about a year and a half ago, I believe. About a year ago, I learned I always heard about this MCA, Merchant Cash Advance. Really didn't know much about it. I happened to meet Adam at a conference and learned about his platform, and actually signed up to be an investor on the platform. And I'm really enjoying it. And I wish I would have found out about how I could invest in an asset class that I knew nothing about, and really kind of diversify risk by putting as little as $100 into a deal, and as up to a certain percentage. I'm fascinated by the potential returns, which are significantly higher than many other asset classes. So without further ado, we're going to jump into the MCA world and learn about the first fintech platform, where if you're an accredited investor, this could be a great opportunity for you to take a look at and diversify your portfolio. Please welcome Adam to the show. Hey, Adam, how you doing?
I'm doing great. Thank you. Thank you for having me.
All right. So for people that don't know, let's kind of dumb it down and just let people know what MCA is, and how this platform can help people.
Sure. And I'll even go back to 2008 when I was in the mortgage world, and we were doing mortgage and real estate, and even doing business loans for friends and family who needed money. And it was very easy prior to 2008 for businesses to kind of go to the bank, very easy, go in there, sign an application, within a day or two have anywhere between $50,000 to $100,000. After 2008, what happened was, there was the banking crisis, and the ability for businesses to get capital became increasingly more difficult to get money. And I had left mortgage and real estate and wanted to get involved in this industry that was lending money very quickly and very easily to businesses. And I didn't know at the time. Somebody referred me to it, and they said something called Merchant Cash Advance, where we can get businesses money within 24 to 48 hours. And I said, wow, that's amazing. And without going into, we can go into specifics, but I went into the shop. I saw people just over the phone getting an application, just a one-page application. They'd get 3 bank statements from the merchant or the business owner, and within 24 hours they were getting money in their account. And I was just fascinated by that whole premise. And since 2010, that's kind of where my focus has been, in helping businesses get money to be able to operate their businesses. So
perfect. So a deal comes through, so you have like a broker network, or sometimes they come direct, but most of the time they're going to come through like a loan broker, and they're going to place the deal. They're going to provide an application and bank statements. And then how do you guys vet the deal? And then how does it work on the platform where an investor then can sign up to actually look at these deals and then fund?
Sure. So I can kind of break that into kind of 2 parts. So the first part about how does that MCA work, and then we can go into the platform and why I felt the platform was kind of next level, and being able to have people come to this network of deals that are available, helping American businesses while also getting a high return for their money. So one of the things that I realized post 2008 is that the banks use credit primarily as a gauge to see whether or not a business owner should be able to get capital, right? And to a certain degree, they're correct, but to a great degree, they're not. I mean, if you're an entrepreneur or a business owner, you know that over years in business, you're going to have good years and you're going to have bad years. And it's just that, peaks and valleys is the way business goes. So if you're a business owner who's a middle-aged guy and you've been making payments for 20 years, 21 years, no problem, right? And then all of a sudden you hit a rocky road, and now for 1 or 2 months, you start missing a payment or you have a late payment. What happens is the banks look at that and find you unfundable. So we can kind of go into a whole conversation of why the whole credit system, in the U.S., banking world is kind of broken, because why should it be that a business owner is penalized, right, when he makes a life's worth of good payments and then gets to a point in his life and he can't make a payment for a month or two and then they're penalized. So for us, we don't do that, right? What we do is we do something called common sense underwriting. So we'll look at a business, we look at the credit, just to see what kind of trade lines he has and what kind of history he has, in his life. We look at how long the person's been in the specific business he's in and in the industry he's in. And then we look at cash flow, right? So when we go back and we look at, let's say, 3 to 6 months of bank statements, we get a very good indication of the business, how much money they're earning, what their expenses are, what their revenue is, what their daily, outlays are. And from that information, right, we can understand the business, the health of the business, how much they can afford, and how much they're able to pay back over a specific period of time. So for us, it's just about affordability, right? Does credit matter? Not really. The only thing that we care about more than anything else, obviously, we look at background. We want to make sure that the business is healthy. We want to make sure that the individual who's the business owner understands his business and so forth. But as long as the money's there and they can afford it, then, we're very eager to come in and help those businesses attain capital very quickly. Because sometimes, in business, you need money right away. We deal with pizza shops, and we had a case not long ago where the oven went bad, and it was like $30,000 to repair the oven. He just didn't have the capital. It came to us, and within 24 hours, he had the money. So this is something that truly helps businesses, and we're looking at all different factors. But at the end of the day, if the business owner needs the capital and he can afford it, we're going to give him the money. So that's kind of how that MCA works.
And so for people that are watching this, it's not a loan, it's actually an advance. And so they have a set term of anywhere from, Adam, it's usually like 6 to 9 months in between there?
Correct. It can go anywhere from even a little bit broader, depending on the need and the outlay. So anywhere from, let's say, 4 months to about 12 months. That's the average term of the advance that we give businesses.
And then each week they're getting debited through their bank, and through an ACH they're getting debited a repayment. So they'll have like a set amount of payment getting debited each week. And then as an investor, like in my account, I can see each week, or what on a certain day I'm getting credit from. I think I have like 12 or 13 investments now, and so I'm getting paid back, and I'm seeing little additions to the account. And then what I do is I just we'll keep the money in there, right? And you just keep growing and growing it, and just spending your money. Because as an investor, that's what really the name of the game is, to the velocity of money. And I think that's why I really like the MCA space. And then, you got to look at it holistically, that you don't want to put all the money into one, because, on these type of deals, there's something like a national average of a 12 or 13% default rate, right? Or something like that. So, I don't know what the actual numbers are. I just made that up. But so I just put a little bit of money in each of these investment opportunities and spread it out, right? And then you spread your risk. And then, essentially the factor rate. Can you explain what a factor rate is to people? Because I think at first I was a little confused when I got involved in investing.
Sure. Just before I say that, I'll just go back a drop. So what happens when we take the monies out of the account, and it's basically an ACH authorization to pull it from the business owner. So we do it either daily or weekly. So depending on the term and depending on the situation, we'll sometimes take it daily, sometimes we'll do it weekly. So and the reason behind that is that we just want to take little pieces every day or every week, so that it's not one big payment at the end of the month. And again, it just goes to cash flow and affordability, so that we want it to have the least amount of impact on the merchant. So the question you had asked was in terms of factor rate, right? So the factor rate, it's almost like factoring, where what happens is we're buying a set of receivables today at a discount, and we'll take it over a period of time, right? So there's no interest here. There's no usury. It's nothing like that. It basically factors just a one-time cost of money to be able to basically buy those receivables at a discount today so that they can pay it over time. So they get the cash today, and then they'll pay it back over a specific period of time.
So the interesting thing is the factor rates can vary from 1.3 to 1.45, or it varies, right? So
yes.
So essentially, that's really, if you look at it from an investor standpoint, that now there's fees, there's syndication fees, there's management fees, and different things. But so like if you're lending $100,000 and the factor rate's 1.45, you're getting paid back $145,000 over that term. So as you can see, the returns could be quite significant. Now the key is if you can, as me investing in these syndications, can I spend my money, and then as the money gets repaid, my account's constantly gaining money in it, and then I'm taking. You have a wallet in the platform, and then you can just, you might build back $150, and you could put $100 in a deal, and you can keep doing that. So really, you could just keep your money just keeps on spinning and spinning and spinning.
Right.
When I understood that, I'm like, wow, this is a great, probably in my mind, one of the best places to put your cash. And I think it's, and obviously, right, you got to do your homework, you got to understand the business. But I really, when I came in with a couple grand just to get started because I didn't know anything about the industry. Even though I do commercial loans, I never really never brokered any MCA deals. And now I find this whole market really fascinating. And actually, I should probably start brokering some of these deals because
right.
Although it's a costly endeavor, it also is like the saving grace for many of these businesses that don't have any options. Correct. So it's a win-win for everybody: the investor, the borrower, and everybody in between is going to reap the rewards. So can you walk people through kind of we're going to put a link below to the platform so you can go and you can sign up and test it out. And could you just kind of walk people through what they can expect? Like they sign up, and now they sync their bank account so they can just deposit their first couple grand to get started. And now they'll see deals that pop up, and just kind of walk them through what it looks like.
Right. So what I'd like to do is I'll go back for a second, and then I'll move forward. So you said something very interesting in terms of the returns, right? So we last year as an industry funded over $23 billion to small business throughout the country. So where the banks are kind of falling short, the MCA world is coming to the rescue kind of and funding these companies. So the question is, the cost of money, right? Like you said, 30, 40, even upwards of 50% sometimes over a year. And the reason why the cost is a little bit high is because when we give money to businesses, right, where there's almost no, I don't want to say guarantee, but, we're banking on them. We're like a silent partner in their business. So, we see that they have the cash flow. We see they have the experience, so we go out there, we give them capital based upon a risk factor, right? And when we do the modeling, that's what the risk factor comes back with. So you had made a very great point early in terms of what those default rates are, and they'll vary depending on how risky, because there's always, a level of risk that any company is willing to assume. So it's really between 10 and 12.5% is where we see the default rates kind of varying over time, right? So that means if the average return is, let's say, 45% over 6 to 9 months, but our default rate is about, let's average out 11.5%, that as an investor, right? So you have access to a portfolio of deals, right? So the key to this is just to consistently go into each deal, right? If you have, let's say, $10,000, right? So go $800, go into 12 to 15 deals, and if you do the math, right, if you know the return is going to be in the 40s, but the default's about 11.5, it's almost impossible to lose. I'm not going to say it's impossible, right, because you can have COVID. There's natural catastrophes that could occur. But as long as you're consistently putting money across the board, right, your chances of winning or having a significant profitability in your portfolio is very high, right? Where people kind of fall short and where they end up losing is, they spot hit or they pick and choose the deals that they want to go into and how much. Somebody might say, I love restaurants, so I'm going to put 80% of my portfolio into restaurants. Risky, right? We've done this for over 10 years. So we have risk models, we have analytics, we have data that when we do our underwriting, and just so you know, in terms of safety, right? So we pre-fund every deal that we put onto the platform. So it's our own money. So we wouldn't put a deal on the platform that we ourselves wouldn't fund, right? And the company always maintains a certain amount of money in every deal that we fund. So it's already pre-funded by the time it gets to the platform. So that's the level of trust we have in that deal. So now we put it onto the platform, and then as people go into it, we kind of take our positions out. Right. We always maintain at least 10% for the most part of every deal, sometimes between 10 and 20, just again, depends on the size of the deal and the type of deal. But ultimately, the best practices here is just to consistently across the board, and then in terms of money, now, as we had said, money comes back either daily or weekly. Now you have complete control with an app similar to like a Robinhood or the web portfolio that you'll have on the net, and you have complete not only transparency but control of your money. So if you want to leave it as liquidity in your wallet, you could do that. If you want to take the money back every day into your bank account, you can do that as well. Best practices, if you want to commit to really making significant returns on the platform, either 6 to 12 months, every time a payment comes in, leave it there, reinvest it, put it into another deal, right? And just keep those consistent, investments right across the board. And within 12 months, chances are you're going to see a very significant return, better than almost any other platform or investment that's on the market today because of the structure of how we put these, advances together. So.
Yeah, no, I love it. I want to start brokering these deals because I've been brokering money my whole life. I'm like, wow, this is pretty good because the brokers get paid pretty well on these transactions. So, and the thing is everybody needs money. At some point, everybody needs money, and so that's essentially a solutions base. And sometimes you get deals on the platform where like they could go bank, but they just need the money quick, right? And so instead of waiting 2 or 3 months to get a business loan from a bank. Like I do a lot of SBA lending, it's not going to happen quick. They go, hey, I don't care about the cost because whatever I'm doing with the business is going to help me grow. So you get some of those deals, and then you get some,
and a lot of times it's not even about. Yeah, I'm sorry. It's not even about the fact that they can't get to the bank. It's the speed at which they need it. So, a contractor needs material for a job that he's starting tomorrow. A trucker needs another truck because he has a contract with Walmart. So there's so many instances where it's not just about the fact that they can't get at a bank. It's the speed in which we can get them capital. Nobody can match us, right? Within 20, if we get a deal, by the way, it happens at times. We'll get a deal in the morning. By the afternoon, it's funded already. That's how quickly we can move, as long as everything that we need from the business owner is satisfied. So, and again, and in most cases, not even that much stuff, but, we move as quickly as any business owner can, move it with us.
Where do you see the growth? Like, because of your technology, it's so easy. Like I just actually, right before we got on, I put money into a deal that just hit the platform, because the deals I watch them, they hit the platform and they're the investors come in and they're gone within like an hour or two typically.
Yes.
So I guess right now it's just getting more deal flow onto the platform.
Deal flow. Right. And it's not about, we get hundreds of submissions a day, and we're very selective. We could put up so much more than we're doing today, but we're very selective and we're very careful, because the key to what we do is putting up deals that are going to perform, right? We want the highest performing deals. So we go over and above, even probably more conservative than most, to make sure that the deals we're putting on the platform, will perform, or in the best of our abilities, assessing that they will perform.
And if somebody had like a self-directed vehicle, like an IRA that's self-directed, could they invest in the platform with self-directed vehicles?
Absolutely. We actually have a bunch of people, yes, that use a third party, and there are a bunch of them out there. You can just let them know what the investment is, and they'll act as that intermediary to, be that platform to be able to put those deals into. So yes, it's definitely doable.
And then, so what's the goal now for 2024? Like, what do you guys set out to do volume wise? Would be your goal?
So one of the things that we didn't mention, and I like this because it's kind of one of our claim to fame. So Kevin Harrington, one of the original sharks from the hit show Shark Tank, he's not only a syndicator, he's also a partner of ours. I reached out to him over a year ago, explained the business model. His team kind of vetted me for about 4 months. He lives in Tampa. I went down to Tampa. I did the whole presentation, showed him what it's all about, and loved what I did. So he wanted to be part of it, because his whole genre and what he did in his life is help businesses, right? Shark Tank was helping businesses. So he wanted to kind of jump on board, and every month we go down, we do videos. So we just did a big video shoot where we're going to be getting a lot of content out to the net, because there's two sides of what we want, right? Because we need to grow on both sides. We need a syndicate base to grow with us, but we also need more deals. So concurrently, we're putting out ads and we're spending money in marketing to the syndicate base so that we can get more people on the platform. At the same time, we're actually utilizing our what we call an ISO network. It's like a broker network. So we're getting more brokers signed on every day to be able to get more deals. We're actually trying to get deals directly now. So, we're trying to get to a point where we're doing about $5 to $10 million a month for 2024. That's our goal. And, we've set out on that course. And, with God's help, we'll get there.
Yeah, no, that's my goal this year, is to actually broker some deals, because I have my podcast and I talk to business owners all the time that need money. And what I like about it from a broker or an ISO, whatever you want to call us, is that you can get paid in a day or two, right? Like, it's so quick, and
Yes.
they're lucrative. And so all you really have to do is reach out to, I think as a broker, there's there's literally millions of business owners. It's just reaching out to these restaurants, all these different, there's a lot of different diversity on the platform as far as businesses that, like, I've put money into restaurants,
Run the gamut.
I put money into the gamut. So, and I don't really care. To be honest with you, I just spread the money, and I think that's the best way, because, like, it's almost better just to not really have a particular niche, and even, you guys rate their credit on the platform. You show deposits,
Yep.
Whatever any liens are. Now, for you that haven't invested in MCA before, it's they typically do what's called a UCC filing, and that's like a blanket lien on the business. Pretty much is if they don't pay, that business is not going to be able to go anywhere. They're either going to have to fail, and there's not like a collateral necessarily, but the UC, if this business has been around for 5 or 6 years, and they know they can't really do anything, so you do have security, not in the same sense as like a hard money loan on a house, but it is pretty substantial. So like if they want to run a business, they can. But typically, do they sign personal guarantees on deals like this?
So what we do sign is something called, it's not a personal guarantee, but it's a personal guarantee of performance. It's a very small distinction, but ultimately it can hold them personally responsible to pay back the advance under certain circumstances. So like you said, there's a UCC1, which is a blanket lien, on the company itself and the assets of the company. And there's also this concept of a personal guarantee of performance. So, there is security, and talking about recovery, right? So our portfolio to date, any deal that goes into a default status, right, we have about a 35% recovery rate. So our recovery, unfortunately, being in the lending business, you're also in the recovery business, right? So, we have in-house recovery, we have external legal teams that go after, any of the monies that are owed to us. So they've been very, very effective. But our first means when it comes to any of the merchants and business owners, we always want to resolve things amicably. We'll call them, okay, you can't afford X today. What can you afford? You need a little bit of a reprieve for a week or two, whatever it is. So we really work with the merchants, because we realize that businesses do have issues, and there are everyday instances where there's cash flow issues. So we first line of defense is to work with them, see what we can do. If they go dark, and we always employ them, please don't, stay in communication. But if they don't, if they give them bad advice and it happens, we do have a legal team and staff. And we work very quickly, and we do recover about 35% of the time. So, the factor rate, make sure that we're covered. Again, we're in business to make money, but we're also in business to recover our assets. So we've been doing this for 10 years, and we're very successful at this model in the way in which we recover assets if we have to. So.
Perfect. Yeah. So guys, this is really an interesting investment strategy that I've gotten involved with, I think maybe even 2 years ago, actually.
When we met at the convention in Vegas. Yeah.
Yeah. That wasn't this year. Yeah, it was 2
years ago. Wasn't last year. It was
2 years ago. Yeah.
Yeah.
So anyways, it's a great way to diversify. So if you're, business owner yourself or real estate investor, I like to have different buckets. And I definitely think that the MCA bucket for me is going to grow this year. and I want to grow that, and then basically just let that money just spin. I don't even want to pull it out, right? And I think that
Right.
is a great tool. And then I could probably broker some deals to your platform and keep my commissions in the deal.
Any day.
Yeah.
By the way, we have a lot of ISOs that do that. They'll come to us, they'll fund the deal with us and say, hey, listen, can we put 100% or 50% of our commission into the deal? And I love those. Those are my best because they're vested in the deal, and it makes me even that much more confident. And I tell people, we even have ISOs that say, listen, we'd like to even fund partially the deal. Here's a $20,000, $30,000 deal. We want to put 5,000 of our own money into it, and they do. And those deals go to the front of the line. We love those deals, because they know their merchants, they have the relationship with their merchants, and they have that level of comfort, it just makes us that much more comfortable funding those deals as well. So,
yeah. Any closing thoughts on the platform? I'm a member and I really love it. And obviously you guys do your homework, go in there. If they visit the website, you can see a lot of the information, and there's going to be, videos and stuff so you can learn how the platform works. How do they go about? They just basically go and sign up on the website, and we'll put a link below.
Yeah. Yep. Go to themerchantmarketplace.com. There's 3 different links, one for the investor. So go to the investor. It's a fully automated sign up. You go in there, and ask you a few questions. You do a KYC, you attach your bank account, you sign the syndication agreement, you get credentials. And, once you attach your bank account and money clears, it takes about 24 hours. It's ACH. You're free to kind of invest. So it's really, really exciting. Do
you guys have a, what would be cool? I was thinking is I like when you guys do like an auto debit, so I can just put I put it like $500 a month. This automatically get debited. So I just force myself. I like to have 4 savings accounts. Do you have anything?
I love that. We don't have it, but I'm definitely going to talk to my legal team or my tech team about implementing that because I think that's a great idea.
Yeah, no, I think look, everybody, we make money, it goes out the door, but I know if things get debited from my account, it's like I've been paying $300 for this software that I want to cancel for the longest time. But the point is, if I had that $500 or $1,000 a month going out every month, you forget about it almost. You reinvest it. Now your money is just compounding and compounding and compounding.
Yeah, so we did something along those lines called the priority pass. And what that is you can allocate a certain amount of money over a certain amount of deals that at a certain percentage. So for argument's sake, let's say you want to put $1,000 in each deal, but you don't want it to be more than 10% of the full deal itself, right? Because you don't want to be more in terms of leverage than 10% of any deal. So you could set that up, and the next 10 or 15 or 20 deals you determine will actually get vested in the way, in the dollar amount and percentage that you want to be invested in the deal. So we call that priority pass. We're testing it now, and we're going to be launching it probably right within the next 3 to 4 weeks.
So when you got started in the MCA business, it was kind of like the wild, wild west. Now with your platform, you're bringing the whole fintech thing to it, which I haven't seen anybody doing that, which is awesome.
So I'll tell you how the brainchild from this. So years ago, I saw they had Prosper and Lending Club, and I was like, wow, this is fascinating, where you can basically earn 8, 9, 10% giving personal loans to people. As an investor, I can go on and see a portfolio of people who needed money. And I'm like, 1 second, I got involved in this 10 years ago. I'm like, I like this concept. Let's 70 developers later, we have a whole team to put the team together. It took about 5 years to build out this whole platform because there's so much that goes into this. But looking at these other models, why shouldn't it be that an investor can come into the merchant cash advance industry and have the ability to get these or have access to these high yielding, investments. So that was the brainchild at the time. And it took a lot of money and time and effort to get to today. But now that it's here, we're the only true fintech platform in the MCA world, so.
Yeah.
And we're excited about it.
The question I was going to ask too, I didn't know what the market cap in the U.S. was, and it's about 23 billion in MCAs, that was one of my questions today, but you answered it already. So that's good. Yeah. So definitely exciting times. And so how are you what's your plan to go direct to consumer, to business owner, to get the business direct?
So we have a little retail team that we're going to be creating. Again, this is all, first quarter 2004. When we just did some recordings with Kevin, we're going to be doing our own, B2B marketing directly to the merchants. So first quarter of 2024, we're going to be going direct with our own sales team to try to achieve this ourselves, because we need more deal flow. So it's a combination of ISOs and brokers and our own retail side. So, anything that we could do to bring more deals, we're going to be doing.
Very good. Well, guys, I want to bring diversity to our channel and show you guys, some stuff that I've found that I really enjoy. And when we make our money in a real estate or business, we got to do something with our money, because remember, your money, they're your little employees. And so this is just one vehicle that I'm really starting to really enjoy and see the opportunity where, in the past that unless you were doing these merchant cash advances, you're not going to get involved with. Now this is opening up to the accredited investors of the world to get involved with. And what I like about it too is you're diversifying, and you can pick and choose how much in each particular deal. And I like it. And it seems I was on another platform that was doing it does hard money loans, and my returns on merchant marketplace are far, far superior. So, I'm trying to double my money quicker, not slower. So I do like this platform a lot.
Oh, yeah, my pleasure. Then the last thing I'll say is, in closing, is that not only do you get to make a significant return, potentially, but you're helping the mom and pops, the small businesses, you're helping them get access to capital and really grow their businesses, and that's the main goal in putting this all together, is to kind of help those businesses grow, where the banks kind of stop. We came in and we're doing everything we can to get the money to those businesses. So, again, I thank you for having me on. Anybody, please check out the website, see what it's all about. You crawl before you can walk. You start as little as $100, get on the platform, and see if it works for you.
There you go. Thanks so much. We'll see you guys in the next episode.
Meet Beau, the driving force behind Business Ownership Coach, unlocking the path to business ownership. Visit www.businessownershipcoach.com. Thrive with Business Ownership Coach.
Hey guys, Beau here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.